We also have an election coming up during this next quarter. And so I want to talk about in Q4, I want to talk about the election because we've had a lot of questions from clients about the impact of these elections on their portfolio and their expected returns in light of either the Republicans or the Democrats winning in this election. So to sort that out, what we did is we went back through history, in this case, 94 years back to 1926, and we looked at exclusively the periods when Republicans controlled the presidency, the Senate, and the House. And we compared that to when Democrats controlled all three of those. And look at this amazing result that we had checked 3 different times, by the way, from 3 independent sources. And they all came up with the same result. Under the Republicans, 14.52% average returns for the 13 years that they controlled all 3 of those in what we call a unified government control. And under the Democrats, it was 14.52. Can you believe this? To 2 decimal points, the same return under both scenarios. Just amazing. How could this be when you know there are different policies that these 2 parties like to put into place? You also know that given the fact that all 3 departments of the government here are basically controlled the same way, and they are probably very likely to get through the policies that they want, and yet the returns were the same. Part of this has to do with the fact of the efficient market hypothesis. In other words, prices of securities rapidly adjust to new information and the forecasts of what that information means for the future, okay? And we get roughly 10 million people trading 10 billion shares every day. And through this price discovery process, our financial markets do an excellent job at coming up with a fair price, no matter what the market conditions are. So if things for some reason look bad, the price adjusts downward so that going forward, we have the same expected return for the risk the investor is taking. And what that's doing is constantly resetting things. And so when you look at daily returns, you will see that about half of them are up and half of them are down. Well, that's what you would expect from a fair price. And in fact, 51% are positive, 49% are negative, and the average is 0.03%. So if you look at the returns relative to that 0.03, half are better and half are worse. So markets do a great job at discovering the fair price. I mean, how many times you've heard on these financial channels or in financial media, the market is overvalued, the market's undervalued. I'm going to here to tell you that's all nonsense. How could it be? How would somebody have the superpower to know a market is overvalued and undervalued when 10 million people contributed their information, their forecasts, and they put their money down to either buy or sell this particular or all these securities in the world? And how could some individual know more than the combined knowledge of all those people? Give me a break, okay? It's all nonsense when people make all these claims. Number one, you don't have a record of all the time they've made these forecasts and how accurate they have been. And we have a chart on our website that says there really isn't anybody who's come up with a accurate enough forecast over a number of forecasts that does better than just buying and holding a market portfolio. So anyway, here you can see they're the same. So why worry? Doesn't matter. Another way to look at election impacts is to maybe just look at the years during that election, which is what we have now. And clearly, COVID had a very big impact on this year. We'll see, but maybe it was more of an impact than the election results. But if we went back 90 years to 1928, we looked at all the election years. Look at here, they average out at 11.28% per year. Great return. How about during the year after the election? Well, those have been 9.88%. Also a great return. So let it go. Don't worry. Stay invested. Trust in markets as to their ability to set fair prices so you are positioned to get your fair return. That's how it all works.